Hey, good morning, everybody. Today is Wednesday, January 20th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The C in CANSLIM stands for current quarterly earnings and sales and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and sales, and preferably accelerating earnings and or sales. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 21 were from integrated utilities, 19 were from real estate investment trusts, 13 were from utility networks, 8 were from restaurants, and rounding out the top 5, we had 5 stocks in the managed care industry. These might be good places to look for leadership in this market when the market confirms the next uptrend. Let's start today by taking a look at the Russell 2000. Russell yesterday recorded an inside day. Notice how the low yesterday was higher than the low of the prior day, and the high yesterday was lower than the high of the prior day. That's an inside day. It doesn't tell us much about the trend in the market. However, the Russell 2000 still appears to be in free fall here. As I've been noting recently, I think the Russell's the key to the market going forward. We need to take out resistance here in the 1040 area. That would be a good start. Let's take off these markups and look at a 5-year chart. Support in the Russell 2000 is all the way down here in the 868 area. Going back to our 6-month chart, in order for me to get a little bit more bullish about this market, I want to see the Russell better this downtrend right here. And so we've got a lot of work to do. We need to see the Russell come up and at least challenge this 1205 area. Be careful in this market. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking is the most important element. So let's take a brief look at the market. Markets closed mixed yesterday as the S&P 500 edged higher and the Russell 2000 and the NASDAQ both closed lower. Volume was below Friday's levels, our overbought, oversold indicators showing an oversold condition in the market. Keep in mind that an oversold market can become severely oversold. According to our market timing model, we remain on a primary sell signal with a secondary aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. The S&P Composite is an aggregate of the S&P 500, the S&P 600, and the S&P 400 indices. The aggressive buy signal is triggered when the total number of stocks in the S&P Composite trading above their 9-day moving average is greater than the number trading above their 50-day moving averages. This is a much lower hurdle in an extremely oversold market. We're not seeing any of our universal watch list stocks even approaching legitimate buy points, so I would take the aggressive buy signal with a grain of salt. That noted, declining issues outpaced advancers by better than 2-to-1 yesterday. The New York Stock Exchange advanced decline line continues to look more bearish. New lows continued to swamp new highs. Large capitalization stocks bettered small again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Okay. Yesterday, the NASDAQ composite was down 11.47 points, or just over 1/4%. We closed at 44.76. We tried to recapture resistance down here in the 45.06 area, but as you can see, we closed below that level. Trading volume was above average but was below the prior day. For you followers of William O'Neill, we are in a market in correction. We have been since January 5th. Right now, the NASDAQ is bracketed by support down here at the flash crash low. That was August 24th. And that low is 42.92. We have support resistance up here in the 45.06 area, but probably more important resistance up here in the 4900 area. We need to recapture this 45.06 range, obviously, before we can make an assault on 4900. Right now, our market timing model is indicating a sell rating on the NASDAQ composite, but as mentioned earlier, we have an aggressive buy signal. The aggressive buy signal indicates that aggressive traders can buy stock but shouldn't be employing margin. More conservative traders should continue to accumulate cash. As I noted earlier, I'd take this aggressive buy signal with a little bit of a grain of salt because we're not seeing any of the stocks in our universal watch list setting up legitimate buy points at this point. Be careful in this market. Let's see what the S&P 500's up to. The S&P yesterday was up 1 point, or 0.5%, 0.05%. We closed yesterday at 1881. We've drawn in this trend line. I'm not really very pleased with that trend line, but we have this trend line. And notice how yesterday that trend line has been acting as resistance. We tried to better the trend line, but the S&P still managed to close below it. We seem to be holding support down here in the 1867 area. Yesterday, the trading volume on the S&P was above average, but was below the prior day. S&P is in a market in correction. We have been since January 4th. S&P right now is bracketed by support down here in the 1867 area, and I would say resistance at this long-term trend line. This trend line goes all the way back to the beginning of the bull market back in 2009. If we could better that trend line, the next major area of resistance is up here in the 1993 area. Our market timing model is showing a sell rating on the S&P 500 with an aggressive buy signal. Be careful. This market is very, very volatile, and I wouldn't want to be putting a whole lot of money to work on the long side at this point. We haven't been talking a lot about stocks lately. There hasn't been anything worth talking about. The market has been in a severe downtrend, and we have nothing that's really setting up in our universal watch list at this point. But yesterday, Netflix, which is an old favorite, reported earnings after the close. The earnings came out a little bit better than expected, and it looks as if Netflix is going to gap higher this morning. And so I thought that since I haven't talked about stocks in a while, I'd talk about Netflix. Netflix provides internet subscription services to watch TV shows and movies to more than 57 million subscribers via Netflix.com. Note how the stock came back and tested its 200-day moving average, which we show in black right here, and seems to have held that area. We got a pocket pivot out of Netflix yesterday as we traded higher volume than any down day in the past 10 trading sessions. Aggressive traders looking for some place to or something to buy might be interested in Netflix on this pocket pivot. Again, I don't like the market at this point. That's not to say that later on this week or next week, I might not change my opinion of the market. But right now, the market's showing tremendous weakness. We have nothing in our universal watch list that's setting up a decent buy point. And so just be careful. If you're going to buy Netflix, keep a tight stop. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.